Hello everyone, this is Evan from the Trade Risk here on Wednesday, March 23rd with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then we'll finish off the video walking through a few individual names. Now, before we jump into the action, I just want to thank everyone who came out for the webinar yesterday. For those of you who registered but could not make it, you should have received a link from me this morning to the recording of that webinar. For those of you who did not register, unfortunately, you will have to wait for the next one. Now, jumping into markets today, finally getting a little bit of traction to the downside, closed down 66 basis points in the SPY, closing near the lows of the day. And this is actually the first close below the 8-period moving average, going all the way back to February 12th. So over a month throughout basically this entire uptrend, we have been above this 8-period exponential moving average. And today was the first day that we closed below that level. Now, we've been moving sideways here for basically all this week and even Friday. We've stalled out right underneath this 205 level in the SPY. We've been just very lethargically kind of moving sideways. Volume has been light over the past few days, so there hasn't been a whole lot to make from this action. I mean, you could have perceived it as bullish just given the slow consolidation moving sideways, but today you finally saw a little bit of pickup in the selling pressure. It was pretty broad based out there. The NYMO actually went negative today, so that's retraced quite a bit from the extension highs that it was at, those overbought highs that it was at, particularly back here on Thursday of last week. So it's basically flat. I think it's maybe slightly negative on the day by the close today. So that's sort of interesting that maybe the bears are getting a little bit of traction here, but it's still very tough to say. The volume's been light. There hasn't been a tremendous amount of energy, and we have at this point worked off all of those overbought conditions that are out there. So really, the market it feels like it could go either way right now. But again, in the very short term, in the context of this uptrend, we are kind of just falling off and sliding a little bit lower here. So I think you just need to be very careful. To me, this is a market that I want nothing to do with, really, because it's so indecisive and I feel like it could go any way. It could just, we could easily see a nice little pop here and take out, today's highs and then, off to the races on this uptrend, or we could just see it continue to roll over and slide down. So for me, I don't see too much of a directional edge here. So we're keeping things very light, trying to find exposure that's not so correlated to just the broad S&P 500. We're still net long, and we'll even discuss some of those. We put on a new position today. We'll go through that later today. So, again, the context here, bullish uptrend, that's still intact, but we are starting to slide a little bit here, lose a little energy. So you just need to be careful here. I think the first level we were looking at was just, we basically said this morning, the longer the S&P 500 stays below, 203.80, the more likely we are to sort of roll over and drift lower. We basically saw that, although it was tough for the bulls to give that up. It was late day where we started to really see that happened. So now we'll have to see what goes on from here. Remember, it is a short week this week. Tomorrow's the end of the week because of Good Friday. Markets are closed on Friday, and we might actually get our first down week for the past almost 2 months. 5 or 6 weeks in the stock market. So keep an eye on that. Tomorrow's the end of the week. Let's see how they finish us. Right now we're down 57 basis points on the week. The next big level of reference point to me is down here right around 201.25 or so, which is basically the highs from the 7th of March and then the lows, this little pivot low from the 15th right before Fed. So keep an eye on this level right here. If we continue to drift lower, I'd say that's where that's the next level of interest. Now, more importantly, I'd say is the IWM. This is really interesting because you can see we effectively failed to hold these highs here. We made this nice convincing looking push here starting back last week on Wednesday on Fed, the 16th, the 17th, the 18th, giving you a nice looking pattern here that we just took out the previous pivot high. We we reclaimed this big support level going back multiple years, but now you see us convincingly getting back below that, and it almost looks like we just kind of failed to break out here, trapped in some longs, and now maybe that gives us some fuel and energy to sort of probe lower here. So keep an eye on this. The IWM down 2.14% today, so particularly weak, the laggard on the day, and it's, again, there's some prior memory, some prior support down here right around 105.50. Let's see if it can hold there. It's below the 8 period, coming into the 20 period, exponential moving average, so keep an eye on that. I think, this is a pretty easy reference point to use, right around 108.50 to 109. Get back above there. Sort of all bets are off on this market, on this particular index, at least rolling over, and I would not want to be short, if this market starts to reclaim 109. But if you're shooting against that right now, I think you do have a little bit of a short opportunity here. In the Qs, 108 was a level I was keying off of. We barely closed above it yesterday, and then you can see we gave it right back today, closing at the lower end of this range. So I think if you see some follow through here, you got to be worried. If you get back below 106, you have to be a little more concerned. Again, it doesn't mean the world's coming to an end. It doesn't mean we have to come back and immediately retest the lows from 2016. It just means you need to be a little cautious and reduce some exposure if you've been riding some of the momentum here on the upside in the past couple of weeks. Now, if we look at some other markets here, TLT looking pretty good today. This support ended up holding 127.50. You could see it tested it multiple times. This day particularly looked pretty bad on the 11th, but you can see it ended up stabilizing, and now we're trying to push higher here. You can see the moving average is trying to get back in bullish alignment. You get this this trend line right here that it's trying to break above. So things look pretty good here in bond land. You could easily stick with it today as some type of entry and put a stop at today's lows, or worst case, back around 127.50 if you're trading against this level. I think that looks good. If we look at oil today, rolling over, you could see it basically topped out as it started to get back into this previous supply here back from late 2015. So we do have a prior reference point, this little pivot low from at $9.60 from back on the 15th of March. Maybe it's going to come back in here and retest. You can see the moving average is still in bullish alignment, but you have a clear level to work with, about 1060 on the upside, 960 on the downside. About a dollar range, 10% range here in USO. Let's see if it just bounces around in here for the coming weeks. UNG, this one finally starting to crack a little bit as well, down 4%. So quite a bit of a move today. You could see it broke below some support here that has held in for the past week or so. We may or may not have gotten short this market today. See if we can get some further rollover here in UNG. Gold. This one got hammered today as well, clearing, breaking below all this previous support in here, particularly this pivot low day. This was back on Fed day as well at 117.50. It took out those lows, closed below it, did not attempt to really fill this gap at all. So you got to be a little concerned here that we could continue to roll over in gold. Similar with silver, although maybe not as bearish because it is still holding on to this big support area. So 14.50, basically today's lows. You want to see it really hold in here, otherwise this could spill over and then start to retest the lows back from the 26th of February. Still have this big downtrend line that it's working against. This is what's flexing its muscles right now onto this market, it would appear. So for silver, it looks like it's going to need a little more time. It has to get, fill this gap, get back above $15 to start looking real constructive there. And finally, the US dollar, and again, probably should have been covered earlier, but this probably why we're seeing so much pressure on gold, silver, oil, energy, all these commodities, as USO has finally started to catch a bit of a bounce here. Remember, this was the Fed day move on the US dollar where it just got completely crushed, and then we had that nice follow through gap down. Well, it's completely filled that gap, and now it's pressing higher here. You can see there's a lot of overhead resistance, so I don't think this is going to be an easy path moving forward. But you just need to keep that in mind. You got major support down here right around 24.50. It's range bound. It's messy. This is what you can expect from it while it's in there. Now, if we look at some of the sectors, utilities today outperforming Everything else by a long shot up 74 basis points. I love this sector because I am still in this sector. We've been in this sector for all year effectively, and this continues to look good. The trend is higher. We had a little bit of a stair step down here, double test of this $48 level. It held. Looking for some continuation here, maybe get back up to these highs. XLU looks good. Staples continue to look good. Close flat on the day. Couldn't really hold the momentum that they had earlier in the day, but again, these are the two sectors. These aren't new sectors, right? We've been talking about these forever. They've been where some of the strength has been this year. A lot of the strength has been this year, and they continue to demonstrate that even on down days. So utilities, staples, industrials, they're pulling back, but still they've been doing well. They cleared this big zone up here just last week. So these look good. This is, pulling back, hasn't tested the 8-period EMA yet, but still looking strong. Semiconductors, we've noted, they've been strong recently, pulling back a little more sharply, but still in bullish trend, all things considered. And then it's really energy that got hit today. Healthcare, which still looks a little sloppy, hasn't been able to really take out resistance all this year. So nothing's really changed. These sectors are staying pretty. The leaders are continuing to lead. The laggards are kind of doing their thing just as well. If we get into some individual names, Amazon had a really nice reversal. We almost took this reversal trade back on Tuesday when we saw this failure to hold below 550. I like this bar. I just didn't want the exposure on the market, but we did see this reclaim, saw follow through to the upside yesterday, saw more follow through, outperforming and kind of bucking the trend today back to the top end of this range. So Amazon, I know it's been in the news a lot too, but it's working well right now, and it's been leading. Nice 1.6% update today. That's pretty nice, all things considered. Facebook, another one that's continued to work. It's back above 110. There's no major resistance above it. Of course, you have all-time highs up here, right around 115, but it's through the sort of the messy bulk of supply, and it's grinding out highs here. And whenever things start to look like this, they almost, they're more likely to continue in this kind of grinding up type fashion where most people are looking for that pullback. It never comes. So keep that in mind. Facebook looks good. Twitter, just the opposite, looks horrible, down 5% today, taking out the lows here from the 15th and the 16th from last week, and there's some previous supply in here. So this is a dangerous level. Twitter definitely wants to stay above $16. The bulls are going to want to step in tomorrow. Otherwise, coming back down to retest these lows back from their earnings is not going to be a pretty thing for Twitter, so keep an eye on that. Finally, Tesla. The balloon getting popped a little bit. This one had been levitating higher, like there was no chance of ever seeing a downtick whatsoever again. But finally, this overhead supply kicked in. It filled this gap right in here, right around 238 or so. Yesterday, it finally put in its first red day. Yesterday it did. Today, seeing follow through to the downside. Again, you can see even with a 5% down move, it's still just barely closing at this rising 8-period EMA. So still a lot of strength here. When you have a strong trend like this, typically buyers are going to try and show up once this gets beaten up for 2 days, 3 days or so. If we see it down again tomorrow, there's got to be some interest in there. And it's amazing. One comment I'll make, because there's Tesla's been pretty popular recently, but when you see this type of move here, with this type of vertical kind of rise in the stock, it really goes to tell you how many people got washed out on this break of support down here. Because when this type of move happens, that really means that this did a nice job washing people out. And a lot of people just really took this, must have taken this off as it broke below this 180 level, and then shorts jumped on. So I think it did a good job cleaning out a lot of those last existing longs, particularly down here. And then it's just free to roam, as everyone that sold in here just doesn't want to get back on board as it starts to get back along those prices. So anyhow, a great picture though of a nice V-shaped bottom here in Tesla. And in fact, that's the last we're going to look at today. So hopefully this helps. As always, thank you for watching, and I will catch you next time.